All right, well, let's discuss some of the stocks then that we just laid out for you. Amnish Aggarwal, the head of research at Prabhudas Lilladher, joins on the show. Hi, Amnish. Thanks so much for joining in. Well, Axis Bank, that's going to be the top stock in focus, right? A cleaner trade coming in there. So that overhang goes out of the way. How do you expect the stock to perform from here on?
You see, Axis Bank is, I think from quite some time, the bank is doing well in terms of price to book also. It is available at a discount to some of the peers. Banks which are bigger in size, of course, like ICICI or HDFC, they are getting at least 50 to 60%, you can say, premium to where an Axis is today. So that makes, I would say, Axis a good bet in the near to medium term, at least.
What about Voltas and the Q4 quarterly update that they shared? 72% volume growth in Q4. What have you made of that?
You see, this is not something which was very unexpected. A couple of quarters back itself, there was a, you can say, as far as Met or Sky Met, your predictions, El Nino was expected to last till the end of, I would say, towards the at least middle of May, which indicated that from February onwards, we will be having temperatures soaring, and the temperatures are likely to be higher than usual by a few percentage points. And I think since then, if you look at past 6 months or so, the stock has really outperformed. Now, the main thing is that the sales have been happening. The inventory stocking usually happens very well in the month of Feb and March. And it remains to be seen how well the secondary sales now happen over particularly the month of April and May. Because it's a very seasonal business, and the sales in April and May actually determine the trend for the stock as well as the performance for the full year. I think if these 2 quarters, if 2 months in particular do well, then the current year's performance would be good. But having said that, after the rally from say 750 to nearly say 1400 now, I think the incremental returns should come at a very moderate pace.
Lots of other stocks were doing well. Aster DM is one. Amnish, I think you guys came out with a report early April on this one, saying perhaps there will be some its potential for re-rating. The other one is Shilpa Medicare. Stock's done very well. It's up 50% this year. And there is, they put out a notice where they'll consider raising funds. Do you have coverage on Shilpa? And of course, you comment on Aster as well.
No, we are not covering Shilpa. So we don't have any view on this.
Aster, Amnish, anything?
You see, the main thing is this is, you can say, an event-based kind of a trade. Some of the bottlenecks which were there, they are definitely now out of the way. And I think the stock looks good from the current levels, at least for the near to medium term.
Amnish, what are you focused on? Tell us about, instead of we asking you about specifics, what's occupying your mind space? What's top of mind for you right now in terms of actionable ideas?
You see, we have been positive on, say, a few particular, you can say, segments. Like, for example, capital goods and engineering is one segment. Then your auto PVs is a second one. Then hospitals is another segment where we have been very constructive. And I would say some of these private banks. So these are the segments, and then you can say it has been more like a stock-specific call. Having said that, I think now some of these spaces, they have run up quite a bit. They have seen the valuations going up, but I think the scenario doesn't change. And I think as we talked, say, maybe a couple of weeks back, that if the markets have to move up from here, then some of the underperforming stocks of last year, whether these are, you can say, private banks or your IT services, that has to come into play. And I think at least private banks have now started showing some sign of renewed investor interest.
Okay, talking about underperformers in the recent past, staples as well fall under that list, right? We had a couple of operational updates that came in from a few companies. How do you read them? And will you be positive on any of those companies?
You see, staples, we have not been positive practically on any name from the last few quarters. And The main reason for that is that there is very little, I would say, the volume growth has been very tepid, barring say some player here or there. The way the companies have increased margins, particularly over the last 5-7 years, all large companies have seen 500-700 bips margin expansion. So the margins are into a new territory, top line growth remains tepid. And in a scenario where margins are unlikely to move up from here, then you are left with a scenario that most of the players will not have, you can say, double-digit profit growth, at least in the near term. So there might be, you can say, some trades here from time to time, but I think even for the next couple of quarters, unless and until the monsoons are too good and the rural demand revival happens very fast, stable is a space we are not very excited about.
Amnish, I wanted to ask you about the spike we're seeing in gold prices. There are a couple of ways to play it. One is the gold financiers, they get some leverage because on the same tonnage of gold, well, you can borrow more. If you can do that, then it will help their loan growth. Though, in fact, the tonnage is the main focus out there. So you have the gold financiers that have done quite well. CSB Bank is another play out there. And for silver, Vedanta as well as Hindustan Zinc. Any of these stocks appeal to you?
You see these, for example, when the gold prices usually go up, then you will also get people actually coming out more to, you can say, seek funding. So to that extent, I think these companies should do well from here on because the available currency, you can say, for the investors to, you can say, to capitalize on the amounts that goes up, which should actually result in a better growth for, you can say, companies like Manappuram or Muthoot going forward.
Got it. All right. By the way, at the bottom of your screen, you have JTL Industries. Yesterday, there was an intraday spike up in the stock. Maybe the street was sensing this, but they've gone ahead and they've made an acquisition for around 70 crores. 67% approximately is what they've bought. So ballpark, the valuation would be closer to 100 crores is what they're paying for a company that's helping them in terms of backward integration. And the turnover out there is around 225 crores. So the stock, remember, keep in mind, the news could be read pretty positively because of the backward integration. But intraday, we saw a sharp spike in the stock as well. So keep that in mind. What's your view on the pipe space, Amnish? Any view out there? You know, you have some of these companies that have delivered numbers where high-tech pipes that came on the channel. JTL as well had delivered a good growth. But there is that problem with regard to the preference issue that they did. And the street didn't like it too much. And the leader by far has been APL Apollo. Your view?
You see, the entire your fabrication and pipe segment has been doing well because you can say the real estate activity, the infrastructure activity that has been there, and these companies have been increasing the capacities and the demand outlook, at least for the next couple of years, that looks very very solid as far as all these companies are concerned. So I think overall the stocks in the segment should do well, but having said that, most of these stocks now, they are not cheap like what they used to be. They are commanding quite a premium valuation, and APL Apollo in particular, I would say that it has got a solid track record, and if the growth in the infrastructure, real estate and all the, you can say, the adjacent segments, it continues, I think the stock still has got room to give returns over the medium term.
Amnish, when you were talking about the themes, the sectors that you like, you didn't mention real estate. The real estate numbers, which are trickling in quarter after quarter are very strong. So this morning, we've got Godrej Properties, which has shared their update, and they've said FY24 bookings are up 84% to 22,500. And this compares with their guidance of 14,000. So they've beaten their full year guidance by more than 60%. And the company is going strong in the MMR region and the NCR region. Any real estate stock that you like?
Okay, you see, real estate as a sector, if you look at the pre-sales, all the companies ranging from, you can say, your DLF, Godrej, all the, you can say, frontline 5-6 companies. So their numbers have been very good, say, over the past 3-4 quarters at least. And this has resulted in sharp rally in the stock prices also. Now, the kind of base at which we are now, you can say, sitting up, the incremental growth numbers that need to be washed out for. But having said that, the real estate cycles usually are pretty long. The current upcycle has itself come after a gap of 7-8 years at least. Now, if you go by purely the duration of the cycles, which usually happen in real estate, there could be significantly more legs to growth. But having said that, the kind of bookings which are happening, what we learn is that a lot of bookings in the pre-sales these days are also investment-led demand, which could, you can say, hamper some sort of a growth in the medium to long term if the returns on the current investments don't materialize. But having said that, in the near term, I think the outlook on real estate stocks continues to be positive, and all the frontline stocks, they should do well if the numbers continue the way they are.
And Amnish was talking about, I think he was talking about it from a large cap perspective, how if markets have to do well, underperformers like private banks, IT, etc., have got to pick up in 2024. But if you look at, I mean, say just yesterday's session in the broader markets, right? A lot of these beaten down stocks are starting to make a comeback. I mean, IIFL was a case in point. Stock had halved. It's moved up 20-25% in the last 5 days, 6 days. Laurus Laboratories is another bombed out name. Big rally over the last few sessions now. Excite did well, but on the back of it, the other one which has not done well at all is Everready. Everready has sort of saw a sharp turn on the way up. So, the theme of underperformers trying to pick where perhaps there may be a little bit of comfort because everything is generally done so well, I think is well and truly alive in that sense. Amnish, you said you like hospitals. What is the top idea there?
You see, Max Healthcare is a stock we have been very positive about. And the reason for that is that their brownfield capacities in both Mumbai as well as in NCR, they are coming up. In addition to it, they have made a couple of acquisitions. So in terms of bed capacity, it is going to increase significantly, the benefits of which will start accruing from the second half of the current year, right up to, say, to your FY 26-27. So I think this company, which is, I would say, in terms of large cap hospital stocks, in terms of bed capacity, in terms of operating margin and other parameters, I think it scores over all other hospital players. Definitely not a cheap stock, but the way your capacity additions are lined up, the way their RPOB is, and the way the things are going, I think the stock can go a long, long way over the next 2 to 3 years.
Okay, all right. Amnish, talking about underperformers, VIP has been an underperformer. I think you'll have official coverage on that one. Safari has gone way through the roof, in terms of market share, the aggression on ground, the stock price as well. But VIP is promising big things. What is your view right now and the preference between the two?
Obviously, VIP has not done well, particularly if you look at, say, last 15 to 18 months. The volumes have been tepid, and when the volumes are not coming, your margins have gone down. And relative to that, Safari has definitely outperformed, both in terms of performance. And VIP, I would say now it is trying to come back. They are making course corrections in terms of products, in terms of distribution, and they are hinting at revival of demand as well as, you can say, some bounce back in margins. So I think if you look at, say, nearly 15 odd days back, the VIP at around 450, 470 was a very interesting trade. And post that, I think, post some sort of, you can say, the revised guidance which has been given, the stock has seen around, say, 20% odd kind of a run up from there. So even at this point of time, unless until there is a sharp turnaround which happens in case of VIP, Safari continues to be looking more promising and safe at this point of time. But having said that, in terms of P multiple now, VIP is also, you can say, at much more comforting levels than what it used to be. So if VIP is able to deliver on what they are promising, then definitely VIP would also, you can say, give returns from here on. But definitely, I think this space will continue to be in the news because the way tourism, the way some of these travel-related segments, they are doing well. I think the luggage companies should do well over the medium term.
Amnish, thank you very much for your time this morning.